Hello and welcome to this Innovation in Insurance webinar. My name's Ian Smith. I'm the insurance correspondent at the Financial Times. I'm delighted to say we have an experienced and diverse panel to discuss one of the most pressing topics within the insurance sector at the moment, whether you're in InsurTech or an established group: digital innovation. How companies are using technology like AI, computer vision, telemedicine to change the relationship they have with their customers, and the really crucial role that data gathering and data analysis plays within that. Before I introduce the panel, I just want to take a moment to remind you you can ask questions throughout the event via the little text box at the side of your screen, and we'll set aside some time at the end to collate those questions and put them to our speakers. And secondly, I want to thank WNS for their partnership in organising this webinar. Without further ado, let me introduce the speakers. Today in front of you we have Kjersten Moody, who's the Chief Data Officer at US insurer Prudential Financial. She has more than 20 years of experience in data and analysis. We have Vijay Pahuja, who's the head of the North American insurance business at WNS Global Services. He's advised clients across the globe about using data and digitization in their daily workflow. We have Susan Roberts, who's the head of strategy and transformation at John Hancock, the US arm of Canada-based life insurer Manulife. And we have Shilpa Strong, who's the chief innovation officer at Tokio Marine HCC, part of the Tokio Marine Group. Again, she has a couple of decades of experience on both the insurance and reinsurance side of the market. Vijay is going to set us going with a few introductory remarks, and then we'll come back for the group discussion. So Vijay, take it away.
Good morning, afternoon, and evening to all of you who've joined us today. I'm Vijay from WNS. We are an operations transformation company, mainly partnering with the Fortune 500, helping them run their operations, but also help them transform. And we as a panel, like Ian mentioned, fairly diverse in our backgrounds. I think we expect to bring to you an interesting dialogue on innovation and insurance, a bit paradoxical, some may argue, but more of that in just a second. In my role, I have the privilege of working with senior insurance executives, interacting with them on their digital strategy across all segments, be it life, P&C, specialty, group, retail, or for that matter, across the ecosystem, which is, whether it's carriers, brokers, agencies, loss adjusters, or the InsurTech. So I've been tasked to sort of set this up. Now, so as I kind of set this up, insurance and innovation, right? I think those two words didn't really go hand in hand for the longest time. And but the last decade, as I believe, we are starting to see, we've seen some radical changes, and we're starting to sort of see that turn on its head in the last few years. And undoubtedly, you can feel the urgency, you can feel the pace. When I talk to a lot of my clients, some of them still complain about the pace, and sometimes I join them as well. But if I take a step back and look at things broadly, I do believe we have reasons to be optimistic, because there is some very exciting innovation thinking that's taking place in every company that I work with. If I have to borrow from Lou Gerstner for a second here, we're trying to make an elephant dance, right? And that's the point I want to really narrow down on, is that it means that most insurers are figuring out how to fundamentally change their value proposition. Right, as the entire industry moves towards prevention of illness, injury, accidents, right? As they look to build a brand new value proposition, they are also trying to understand that how do they get designed for it. And I think that, to me, it's the hard part. Given our industry, given the legacy, that's where the rub is, that's where the challenge is. We talk about, hey, adding an app here or enhancing an app there, portal enhancement. Yes, I mean, that does make things a little interesting, but is that digital? Is that transformation? Is that fundamentally changing the value proposition? We all talk about Amazon, Netflix, Uber experiences in our respective industries. We all see the glossy front end, which is intuitive, simple, but the back, in terms of what has taken to kind of get the design behind it and get that going, is the hard part. Again, in a legacy industry like us, it's a challenge, and that's the challenge we want to talk about. There's a lot of experience. We all have experiences of tackling that in our respective organizations, and seeing how we can adapt in our ecosystems, and we hope to share that with you today. So hopefully you find that useful.
Okay,
Ian,
so
take us through.
Thank you, Vijay. So taking forward one of those themes, I suppose, shaking up a legacy industry. Well, the pandemic did that for us in a way, like it did every other industry. And I would be kind of interested with each of the panelists, how you think the kind of lockdown periods that we've had, this kind of forced remote working, has kind of either accelerated, set back, really how it's affected the digitization agenda kind of within your companies, maybe with specific examples. Kjersten, maybe I could come to you first on that one. How has the kind of pandemic changed the way you work and changed the plans you had in place on the digital side?
So it's a very interesting question. So I think the experience here at Prudential, for me personally, I joined in June of last year. So I've been in the office fewer than 5 times. My entire interview process for Prudential was virtual, and I have yet to meet many of my colleagues and partners across the business in person, although I think virtually we know each other very well by this point. So what does, so on a personal basis, if I sort of zoom out and take that into kind of a meta statement, the virtual working over the past year and a half proved, I think, to the enterprise in a very sudden, tangible, almost shocking way that big change on short time is entirely possible to both do and to be very successful. Life will continue, although the ways of working and how we work with one another, how we think about our relationships with customers, all of the various processes across the business, it is entirely possible to have sort of sudden change where it is very successful. So culturally, I think it has been a very helpful stimulus to the overall digital transformation thinking, strategies, agendas that we have around the company, because in many ways that we've proven that a digital transformation and how we work together is possible on extremely short notice.
Susan, I'd be interested for you to come in here. Is there anything, with your own experience, and then is there anything that you've digitized during the pandemic that you'll kind of continue on, I suppose? Is there anything that's now set as a new way of working, acquiring customers, or anything that that you've kind of learned during this period that you'll carry through?
Yeah, Ian, it's a great question. And I would say that for us, the pandemic really caused us to accelerate a lot of what we were already doing. And so it wasn't necessarily new, but it brought an increased attention to that work and caused us, in addition to all going home, to really take that time to say, let's think about how do we double down on this work and how do we accelerate it. And so a great example, John Hancock is a life insurance company. If you think about the height of the pandemic, when we were in lockdown, nobody wants to be meeting with their doctor to do blood work or anything like that that's associated with, the underwriting process that goes along with a life insurance policy. And so that caused us to really very quickly think about accelerating a lot of our work efforts around digitizing the underwriting process, thinking about things like not only an e-application process, but the more complex work around bringing in electronic health records and other data sources to simulate and replace, in a lot of cases, what might be gathered if you went to a doctor's office, and therefore eliminating the need for you to go to a doctor's office. And so we jumped in full force and really accelerated that work and have seen wonderful results where the underwriting process has now been reduced from a time period very significantly. And for our healthier customers, or our healthier applicants, I should say, in some cases, it's even an instant issue. So it's a silver lining of the pandemic that it caused us to really step in and accelerate that work. But that type of innovation and that type of really reinvention of the application process, as an example, is something that we will continue doing ongoing. I think we've all learned new ways of working, and I don't expect that we will see it drop back. Our customers and the agents that we work with will still want these types of solutions. And so it's important for us to take what we've already done and continue to build upon it to that next level of success.
Thank you for that. Shilpa, you're a Chief Innovation Officer. Has people being locked down, being forced to use new technologies, has that made your life easier in any way, on the kind of cultural side, as Kjersten said, and in the practical, in terms of things that you've put in place that you'll keep?
Absolutely. So as we all know, and I agree with all the rest of what the panelists have said, we all know that change, uncertainty, and disruption has been around us. So we at Tokio Marine and at Tokio Marine HCC had started that digital journey way prior to the pandemic. As Susan said, the pandemic kind of accelerated the digital innovation. And to your point, yes, absolutely. It probably made my job a lot easier, because most people who thought that they were in a stage where things were working really well and then didn't see the need to change, suddenly realized that they had to change. So that definitely helped. But for us, that journey accelerated and continued for both. We write certain personal lines of business like travel and certain surety lines, but we are predominantly in the specialty commercial sector. And we've seen a lot of digitization transcend personal lines to commercial lines. So for us, where we see the biggest bang in terms of adding value and creating value is in the area of data, leveraging low-code, no-code platforms to improve our response time and digitizing the workflows, and using APIs, integrating third-party data so that we can enhance our underwriting and claims. So there are so many different areas along that digital and insurance value chain that we see impacts, and we are actually conducting multiple POCs to test out various solutions.
Interesting. Vijay, of the clients that you work with, what are the kind of interesting case studies that you've seen people, or what would you say have been the overarching kind of response to the pandemic in terms of how it's affected the strategies that you're already putting in place, I suppose?
Right. Yeah, I think for us, it's a different lens, right? As a service provider, our industry forever, right, was always work from office. Right, there was always it was never imagined that we could actually be working remotely, right? Given the security concerns, given the fact that most of our centers are thousands and thousands of miles away, there was always that inhibition, and it all turned upside down in a matter of days. And to be able to give clients that confidence. And I think I also kind of see just the industry as a whole kind of rose up to that challenge and rose up to that occasion to be able to give confidence to our clients that the business can still go on. Right, in a matter of weeks, the operations were up and running back to normal. I would probably say in a matter of days, the operations were up and running, to a large extent without having any impact on business. So across the board, it was a massive shift. So it was a very different lens from our standpoint.
It strikes me that it struck me that a couple of you mentioned underwriting in your answers, because I think that kind of demonstrates that we are seeing real innovation in the insurance sector in a way that, you know, maybe a decade ago people wouldn't be talking about kind of that level of the core of what insurance companies do being digitized, especially when you go towards the kind of specialty lines. But I suppose, so maybe if to help the audience, we talk about a few different areas of kind of the insurance services chain, and how kind of digital innovation is tangibly kind of changing those. Why don't we start with underwriting? And Shilpa, is there anything that you would say is kind of a particularly cutting edge that you've seen, that you've been working on? Or could you answer the broader question of whether underwriting can go on and be really automated more than digitized? You know, how far could this go really in terms of how the kind of traditional underwriting process could be disrupted?
Sure. So when you think about, like you said, digitization, you know, one area is operational efficiency, correct? And that's most of the companies have been going after that for a long time. When it comes to underwriting and even certain aspects of claims, how you select your risk, how you price your risk becomes really important. And data is critical. How you collect that data, how you collate that data, how that's analyzed, how that's presented, and what kind of automation do you really use. And that's where, you know, various aspects, such as some aspects of machine learning, depending again on the line of business, comes into picture. That hasn't advanced. To be in the insurance industry, just the beginning of the journey, applying machine learning and AI to underwriting. But again, connecting through APIs, third-party data, integrating that with the internal data, creating dashboards, they all add value during the underwriting process. So these are the different things that are actually being worked on right now, and how to make the response time to the brokers and agents from the time a quotation comes in and an underwriter looks at it and decides to go after that business and eventually binds becomes important. So there are these various aspects that we see today. Automated underwriting perhaps is something, and straight through processing, even from an underwriting perspective, something you'll see in lines of businesses and in SME segments, like you know, travel. We are already trying to implement that. But when it comes to specialty, I feel the human touch becomes really important. And as you take predictive analytics and advanced analytics and some aspects of machine learning and integrate that with your underwriting process, which is human driven, that's where the value add is. And we are working on different aspects of it. We're still, again, at the start of that journey, but I see huge potential down the line. Again, there are always unintended consequences of automating, digitizing, and trying to replace humans. But I really feel that I see a vision of human intelligence and machine intelligence working together in a very complementary manner, you know, across underwriting and claims.
Kjersten, perhaps you could come on this one. Yeah. You know, I mean, we see some insurtechs that from the ground up have used AI, you know, in all different areas, but when we're talking about kind of underwriting and where to price the risk, that are kind of using live data to kind of price risks, whether that be car insurance and how people are actually driving in order to kind of price kind of renewals. What's your sense on kind of how much of that core, what kind of insurance service can be kind of digitized?
Oh, I think you know, the framing of the question as we ask it here is what can't be, right? Yeah. So I think we flip it on its head and take a look at our end-to-end processes, underwriting for the different products being, you know, one of clearly the core processes. And, you know, we really think about how we reimagine that process using data, AI techniques to really rethink how we accomplish outcomes of underwriting. So as I think about automation, it's not taking, the manual standard operating procedure and automating it. It's really thinking about what are the outcomes of the processes and how do we use sort of more modern techniques with data, artificial intelligence being key actors in a re-envision process to achieve those outcomes in a more efficient, faster way that also generate better business results. So the precision in the underwriting and the underwriting results are also improving, for having rethought that process. And as we do that not just with, let's automate everything, but it's the what can't be. And I think that's where we are very empathetic to finding the right balance between what is computationally produced versus where do we have people who are engaged in that process, and really resetting what that balance is between the computers and the people, as we reimagine that process.
Where might that line be for you in terms of one line of business, without giving us state secrets away?
So I think there are clearly very complicated cases that come in for underwriting where you really need to have an experienced underwriter be a part of that process and that decision making. I think as we go through and the introduction of AI into the underwriting process, and by the way, for certain products where about 80% of those applications are sort of the beneficiaries of this revamped process. So we're pretty far down the road for many of the product lines. We're sort of, as you take a step back from a sort of manual high touch process into one where data and artificial intelligence are key actors in that process, you need to kind of take your hands off the wheel, so to speak, from the old way and put them back on in the new way. So whether that is, so you're still managing the accountability of the outcomes of the process, but that happens in different ways than you originally would. So this is things, how we inspect for bias, how we inspect for drift, how we are sort of looking across the decisions that have been led by sort of machines. Are we comfortable with that, and can we maintain our accountability in the results of those decisions? So I think that kind of human overlay from a governance perspective, and then having the training and the ability to insert a person into the process as and when needed is part of the new thinking there.
Susan, can I bring you in on this? You gave us a very interesting example of kind of using digital health records and how you've innovated during the pandemic. I mean, how far, taking that example on, how far could it go in terms of some of the things that were prior human decisions can be automated? And I suppose, what's the most important vetting that kind of that humans need to do within that kind of process to make sure that what you're providing to the customer is exactly what you want to, and that it's working in the right way?
Yeah, it's a great question. And I think I agree with the other speakers that it's a delicate balance, right? And so what we've done at John Hancock is that we continue to tune our models. We continue to learn as we go along. And so for our healthier clients, something like, or healthier applicants, I should say, instant issue might be possible, and we can completely automate the underwriting process. But in our more complex cases, the underwriting role in that review is still super, super critical. And then there's a bunch that kind of live in that gray area in between. And so we've built a series of kind of checkpoints that allow us to understand, maybe I can reduce the window of time by automating some portion of the equation, but then I need to drop it out to an underwriter to maybe look at certain things. Or maybe based upon attributes, I need to drop it to the underwriter immediately. And so it's that tiered approach. I don't think that there is or ever should be kind of a one process fits all, because our business is so nuanced and our applicants and our customers have various elements that really put them in different places. And so it's something that we're constantly looking at. We're taking a very conservative approach, and then we iterate and learn as we go along, with the underwriter in its traditional sense always being involved in various degrees as you go up that ladder and as the risk increases.
So
yeah, Shilpa, go.
If I may add to that, if you think about it, when we talk about underwriting, and one of the key elements of underwriting is getting new insights into the risk, right? Predictions. If you have a lot of data to be able to see patterns and trends that we may, as humans, may miss. So where we see from a specialty perspective, the greatest application is in parametric products, for example, in say crop insurance, in casualty lines, workers' comp, to prevent workers' safety, slip and fall, from using variables and collecting data, analyzing and using that information in the underwriting process. So for parametric, it's gotten a lot easier to use machine learning and automation, as we call it. Basically, it's simple. If you pay me X, if a bad thing happens, Y thing happens, then I'll pay you Z. Simple rules. And that's where you'll see a lot of applicability, and where you do need human intervention, but not as much. On the crop insurance side, you see a lot of value-added service that are really important for underwriting, crop yields, using data from sensors and satellites to inform that underwriting decision. So as the others have said, there are certain tasks, certain areas that can easily be automated and then put a human within that process. So, and all this is happening across multiple lines of businesses today.
How about Sigma, you, Shilpa, in the follow market, say at Lloyd's, or where you're not taking the lead on a certain risk, but you're kind of attaching somewhere up that tower of insurance where different insurers are at different levels. If you're higher up that tower and it's less likely that your insurance gets called upon, in those areas, even of specialty, could you see that being something that's automated over time? Obviously, it's happening right now, but I wonder how much you think that could be disrupted. So, someone else has done that very complicated calculation of the lead insurer. Maybe you put more reliance on their humans and you let your robots decide which of those risks will fit in your models that they can just follow.
Absolutely. I mean, was it 10, 15 years ago on the finance side, you had dynamic financial modeling, right? You were running all kinds of scenarios to figure out, what your risk is going to be. On the underwriting side, I can't remember the name of the companies, but there are companies that aid placement of insurance on the Lloyd's market, but also in general. And if you can get data, if you have that data, it just would make it so much easier to be able to pick what layer you want to be, based on your risk appetite. And I can see that happening in the future. But again, the underlying thing is we've got to figure out how to get valid data and the integrity of the data, so that the data, and you remove some of the biases we just talked about a little earlier as well. But this is an area I see big progress happening right now. There are a lot of insurtechs working on it.
Yeah, so we've already had an audience question, perhaps someone that works in this space. How much percentage of the insurance jobs, specifically underwriting, would be replaced by AI by 2030? That's a very hard question to answer. Vijay, unless you have a percentage in your mind, I could kind of put that broadly to you, across the client base that you see, how much could you see, and well, this person's asked proportion of jobs, but could you see a substantial proportion of underwriting jobs being replaced by AI over 10 years?
Yeah, far higher for sure. But let me kind of break that down a little bit, right? So, I think Shilpa kind of touched on that a little bit. It's the line of business that we're talking about. If we're kind of talking personal lines or retail, we are already there, almost. Yeah. Right? I mean, it's happening as we speak, right? Small commercial, fast approaching. But let's say if I kind of come to some more complex life underwriting or annuities, not necessarily underwriting, but the entire application process. I mean, the complexity of the products or the variations, does not, while it's fast moving, today, given the product portfolios of most of the carriers, it is intimidating for the customers to really understand, okay, what do I really go with? What's the best product for me? Right? And really going through that whole process. So I think life, in my mind, I think is a bit away. And then I think if I really look at commercial and specialty, I think that's where we have the most variation and complexity, right? I mean, that's where you will see, we deal with a lot of unstructured data. I think we kind of touched on data, and that's the whole point. You're dealing with so much unstructured data to be able to, and there are technologies right now as we speak to be able to ingest, extract, harmonize, and then validate the integrity of the data. But it is a journey, and I think that's where we are. So I think it kind of depends on the line of business that that the question is coming from. But those are the key focus points where most of the innovation is increasing.
So if I could maybe just add to that. So the question is really replaced by, and I think there's a secondary question which is changed by, and there is sort of a number question at play, which is revealing itself. So it's very hard to answer right now. I think we can speak in generalities. But what we are able to speak more specifically about today is enhanced by, which is this: as AI techniques come into the core underwriting processes, how are we bringing the people who support that process along with that change? So the day job is changing, alongside the process changing within underwriting. And I think in the near term, that is actually the more important challenge, is to evolve not only the techniques of automation in underwriting, but to evolve the talent that sits alongside that process to support kind of the optimized outcomes at the end of the day. So the upskilling, the reskilling, the human journey for this is just as important as the technical dimension to the automation.
Definitely. I want to talk a little bit about claims, because it is an area in which, dependent again on the line of business, there is quite a high degree of digitalization and automation being used. I wrote a piece this week about fraud detection, where there's lots of groups, either third-party providers or internally, using tech in a really interesting way to either filter claims for fraud, and then there was the kind of furore a couple of months ago regarding Lemonade in the US, where they use videos where their customers make a claim, and they then posted a Twitter thread saying that they picked up on non-verbal cues from the video and used that as part of their decision on whether something was fraudulent or not. And then they had to clarify that they weren't being biased towards certain customers. That long preamble is all to say that there are both risks and rewards to using automation when it comes to kind of even just filtering out what you see as fraudulent claims. So maybe start with the life insurers on the panel, and maybe Susan, you could come in on this. What are the kind of attractions of really when it comes to a claim event, letting automation, even kind of video analysis, kind of come to play, because obviously you can spot things like the same health claim being made by parties on multiple, or using multiple identities. You could pick up using like the fact they look the same. What's your sense on the kind of risks and rewards here?
Yeah, it's a great question. I think that so for John Hancock, we're talking about life insurance claims, and we're talking about long-term care claims. And in both cases, especially in the long-term care space, we are using automation, artificial intelligence to help us think and capture opportunities that may be fraud. And so I think when we talk about the claims process, stepping back for a minute, there's really two tracks of activity. The first is we absolutely should digitize the claim. So we want to make it easy for you to submit in the request, to get that thing processed, to understand what's happening as it moves throughout its journey and it's being reviewed. And so we're doing things like digitizing the claim submission and doing text alerts as it moves through the process and all of that. And that for me feels just foundational. Every firm should be doing that. That's the way we like to work in today's day and age. And the insurance industry has maybe historically been a bit behind. And so there's a lot that we've been doing there. On the fraud space, that absolutely is critical. And it's sort of like what we talked about with underwriting, that it's important to have governance that checks in based upon certain thresholds that you reach and risk criteria that you define within your organization. So within John Hancock, we have sort of a tiered approach where certain things have certain levels of examination, and that will increase depending upon the thresholds that we've set. And again, this spirit of we're learning as we go along. So continuing to look at those models and tuning them based upon the results that we see, both from the automation, but also as we do the active reach out and confirm some of those things. And so absolutely, there's a place there for fraud detection. I don't think that it's an easy answer. And so it's something that's important for us to work through and continue to tune as we go along. And it kind of connects in again to those thresholds that we talked about in the underwriting space. It's the same sort of approach and logic.
Would you let an AI model deny a claim? Both Lemonade and Root and other insurtechs say that there's always going to be a human in that decision. They would never let artificial intelligence deny a claim.
Yes, today we do not. And when it's in that category, then there's always a human that comes into play and checks in on that. Because again, we're tuning those models. Now, at some point in the future, might we get to that level of confidence? Potentially. But I think that it's important to always, at this point, have that checking that's happening.
Yeah. Vijay, can I bring you on this on biases in AI? So EIOPA, the top European regulator of insurance, put out a kind of working paper last month talking about its working group kind of concluded that insurers should really be paying close attention to any biases within their kind of AI systems across the gamut. And then also they talked about, fraud detection, as being one part where there can be particular benefits to companies, but then there can be particular harm created if a claim is wrongly defined as fraudulent. This obviously, there are reputational risks here for insurers, and then there's a regulator that's kind of regulators across the globe that are getting tougher on the use of kind of AI collected data. What's your sense of kind of what the tramlines will be of this innovation as to what companies will be really allowed to do when it comes, especially dealing with retail customers?
Right. It's hard to predict the timeline, but I'll tell you.
Sorry, tramlines, as in like how the kind of parameters that regulators might set among about how you use data is what I mean.
Sure, got it. So let me probably give you an example, right? I think I kind of echo Susan's point here, right? I think there will always be a human in the loop, but I think it's the effort that's going to significantly get reduced. Right, so we are seeing a significant, like we work with a lot of our clients where, and like you mentioned retail, we are having liability determinations getting automated, and the accuracy of those determinations are increasing by the day, right? What was true 3 months ago, or 18 months ago, that accuracy has gone up from 50% to almost 90%, and we validate that, right? So I mean, a lot of data getting collected to be able to kind of really take that accuracy up. So the effort that was sort of going in to validate the determinations of the liability, right? So I think it's going to be that factor which is going to keep coming in to be able to inform in terms of what is going to drive and how the regulations are going to get driven, right? Because we are seeing that shift taking place across the value chain, right? Even at the ethanol stage, at the intake stage, there is enough automation and AI that's taking place, which determines or it predicts the fraud up front, again, AI-based. As you kind of move down the value chain, liability determinations, I think Shilpa mentioned, insurtechs are out there automating this today. We are seeing that taking place. You come down and disbursement and payments, that is getting automated completely. So you are seeing a lot of that taking place. And the accuracy on AI, particularly in the retail side, and I kind of mentioned this earlier, on the personal side, continues to increase. And I think that is what is going to inform a lot of the regulatory decisions.
Kjersten, can I bring you in? I want to talk also about businesses have big legacy books. The way that we've had this discussion, a lot of it, we're talking about really exciting new processes. But then another part of this is, as mentioned by Vijay earlier, is the kind of legacy business and how you look to digitize that, even at the basic level. You have a lot of life insurance companies or annuity providers that, when you go through to the back end, you look like you're in a 1990s kind of website. That's certainly the case for my pension provider, and even has a different back end for when I look at my workplace pension and my personal pension, which happens to be with the same provider. It's a completely different system with a completely different look, and the way I engage with it, one's more digital than the other. So there's this kind of huge clearing up exercise of all the historic business, and I want to get a sense on that, because that's a big part of the challenge, isn't it, for big insurance groups operating?
Yeah, absolutely. So I think the good news is that challenge is fully recognized and accepted, right? So
Job one.
that's step one, is acceptance. And it's really taking a page out of the playbook of sort of, loosely speaking, technology innovation. And it's been, very interesting to see the business sort of partners rising to the challenge of what are those key customer journeys that we need to have as we look across the business. So a customer of Prudential in the individual life and the group life insurance and retirement and annuities and so forth, why should they have a materially different experience? Because we're organized differently on the inside. So how do we really take a look at those key enterprise customer journeys? We put the customer in the center of that definition. We take ourselves out of it. As we co-create what that journey is, how do we then use that as an incredibly important stimulant into a transformation of the legacy technology and some of the legacy customer experiences? So it's been a very interesting evolution from this is my customer and this is what I want them to experience when they work with me and I am a portion of the business, to more of this enterprise thinking about the end-to-end customer journeys and experiences with a true customer obsession in how we define that. Mm-hmm. And it's a rethinking. It's not an update of the website so it looks and feels the same as you go place to place, but it's really a rethinking of what that experience should be, using the potential of what data and AI, other types of techniques and capabilities can bring to that rethought experience, and then delivering that. And as a consequence of delivering that, your browser-based experience, your mobile-based experience, your advisor, your human-based experience is uplifted as part of that rethinking. So it's not an upgrade. It's really not an upgrade.
Okay, Vijay, what are your top tips for someone making that change? Trying to bring their legacy business into the 21st century. What can be a big task. Lots of different systems, lots of different bits of business. Sometimes with the same customers, but it might not be married up. What's the kind of where'd you start?
Yeah, I think we are seeing two major trends when it comes to particularly tackling the legacy challenge, right? So one is there are modern platforms, right? Modern systems of records that are out there, right? So we are seeing significant conversion to some of these modern platforms. Easier said than done. These are mammoth efforts, not right. So, but we are seeing that one trend. Second trend we are seeing is what we call is, we've heard of robotics, we've heard of bolt-ons and automation and so on and so forth. But then what we are seeing is now these low-code, no-code hyper-automation platforms that are now coming in and, either complementing your existing SORs, building those connectors to be able to, transform some of those journeys, which Kjersten mentioned, and so depending on the line of business, we are seeing that in both across P&C and the life annuity segments where we are seeing both of these trends. Now, coming to customer, how we go about it, we are, I kind of probably call it micro experiences, right? As we kind of talk about customer journey mapping, but within WNS, I think one of the things that we do with a lot of our clients is customer journey orchestration, right? Which is essentially, because the whole journey, right? I mean, it's easy to kind of map the physical versus digital, right? How is that movement taking place? But it is those, and as you sort of map that, there are micro experiences that kind of take place throughout the journey, and how do you make that frictionless? So I completely agree with Kjersten on the whole, starting with the customer point, and depending on your line of business, depending on how complex your legacy environment is, you take either of the two approaches, because in both you are able to sort of approach your customer journeys in a far more seamless and frictionless way.
Yeah, Susan, how are you approaching this?
I agree with what the others have said, and I would add to it that when you, at John Hancock Manulife, one of the things that we've put front and center is the customer, and really looking at that customer journey. Not only does that help you look at where are their pain points that I should improve on within my legacy experiences or whatever it is, but also it really brings forward new opportunities to support our customers in new ways. And when I think about our industry, that feels very, very critical, that we need to not only be a provider of strong product, but support the customer throughout their life and the life moments that connect into insurance. And so that journey mapping has been a super powerful exercise at John Hancock for us to really think about those moments and build out opportunities to connect in with customers in new ways, so that we're building strong relationships, we're understanding other elements of their challenges and their needs, and therefore able to support them more holistically than maybe we would have in the past when we thought solely about product. So that journeying exercise, I think, is powerful for a variety of reasons, and really is very critical in my mind to innovating and supporting our customers going forward.
Shilpa, asked you for a view on this. I'm kind of struck that if you have a legacy insurer at the, say, Lloyd's of London specialist market, it might still be, a broker walking to the box of an underwriter to get an endorsement on a policy, and it's very paper-based. And I suppose the pandemic has demonstrated that Lloyd's can digitize, and it has the virtual underwriting room. But I kind of wonder, when you have those kind of long-held relationships, and those kind of person-to-person contacts are so important, and then there is a lot of paper. I'm not describing how it was 10 years ago, hopefully, but I just wonder, where that is in terms of how that kind of traditional way of working, or kind of those, traditional communications can be, properly digitized.
Sure. And I think as we've gone through the pandemic, a lot of the folks who actually did that, had that in person. We have lines of businesses that were pretty traditional, as you call them. And I think the key is a couple of things here. One, like Vijay just said, it's about using wrappers, right? It's about using wrappers, low-code wrappers that probably, keep the legacy, but they wrap around that legacy to make it easier. That's number one. Number two is multi-channel experience. You've got to allow for that human interaction, especially for the specialty lines of businesses, but at the same time, allow for other channels to take over, based on the preference of the user, the broker, then the customer. And that's where the trend is. To be able to give them that choice is going to be very important as people switch between different channels, including personal interaction. So that's an area I think most of the specialty insurers are going to look at, because traditionally, again, like I said in the beginning, a lot of these changes that have happened, and Vijay mentioned, they're almost there for the personal lines carriers. They're already, impacting the specialty insurers, even though specialty insurers for the longest time said, oh, we need that human touch. It's a tailored business. You got to really stick to our old ways of doing business. But we see that's changing quite a bit.
It's interesting that some of the broker CEOs said in the quarterly calls, that kind of hop on the plane mentality for kind of brokers to go and do businesses is changing. And, maybe because obviously the pandemic, but it won't come back in the same way. So it will be interesting to see how that traditional way of doing business changes. We've got 10 minutes left. Oh, sorry.
I do believe that it won't. Traditional way of doing business, in-person business, in my view, is not going to go away. It won't. It just be aided and complemented by these new different channels. That will come back, yes, not to the extent that and the thought that people thought was irreplaceable, but it'll clearly be one of the ways of doing business.
Yeah, thank you. I said I'd leave some time for questions. I've got there's quite a good one here that it's framed it in a lot better way than I did, so I'm slightly annoyed about that. But someone has asked, have innovation focus areas changed with COVID? So that they say kind of customer journey versus internal processes. Was there any change through this pandemic to what the focus areas of the innovation was in terms of that league table that one jumped above another? I don't know if anyone, Vijay, did you see anything from clients where something was pushed above another?
Yeah, I probably, if distribution, that's where I kind of see it being the top priority for almost every client that I talk with, being able to get to market faster, and with the pandemic especially, right? I mean, the whole in-person advisor, broker kind of relationship, that's where we've seen the maximum, or, we are hearing, and when our clients look at, that's where they are looking to push the most amount of innovation, right? There's definitely realization that they could innovate a lot more faster. So there's a lot more emphasis on product innovation, product portfolio simplification, being able to get to market faster. So I would say distribution and product is where, I mean, of course, I think, yes, customer, the whole automation and things like that, that was always there. I think, yes, it has accelerated a bit, but I think what we see a fundamental shift taking place is right at the front end on distribution and product.
Susan?
If I have to pick an area.
Yeah, okay, no, that's good. Maybe I'll combine two of the questions. So one of the audience members has asked, what is the state of innovation within each of the organizations represented by the panelists? So how would you grade yourself maybe right now in terms of where the state of innovation is? And then again, whether any particular area has kind of moved to the top during the coronavirus pandemic?
Yeah, I would rate the state of innovation is high, I would say, first. And for us, it's really a few focus areas, as was mentioned, certainly distribution and thinking about that sales process, including, the application process, the underwriting process, the policy delivery, that whole journey, and really thinking about, evolving that to the next place and digitizing it where appropriate, as we said earlier. And a lot of that was already planned, but was accelerated due to COVID for obvious reasons. The other pieces that come forward for me and that we're focused on as a firm is really gets back to what I was saying earlier of supporting the customer throughout their life. And so, we talk about making insurance easy to buy, but also fun to own. And the fun to own part for us means really partnering with many technology firms and other firms to round out our suite of offerings and help us to connect with customers in new ways. And so, for example, we have a program we call Vitality that we launched in 2015. It rewards